Hello, and welcome to Conversations with the Pros, the video series that helps educate current and future homeowners. My name is Janessa Peno, and I'm a real estate agent with Shore West Realtors in Southeast Wisconsin, and I'm absolutely excited that you've joined us today. Please like and follow Janessa Real Estate on both Facebook and Instagram, as I'll be bringing you new episodes of Conversations with the Pros all year long, showcasing local professionals that are in the housing trades. So I'm so excited to introduce today's guest. That is Steve Kern with Inlanta Mortgage. Thank you so much for joining me today. I really appreciate it.
Thank you for having me.
Absolutely. So tell us a little bit about what Inlanta Mortgage is and some of the services that you guys provide.
We are a local residential banker. We provide pretty much every kind of residential financing there is, conventional, government loans, so as far as FHA, VA, WIDA, purchases, refis, pretty much any type of conventional first mortgage financing that a client would need.
Okay. And I bet you guys have been very busy these days.
It has been 23 years for me, and this is hands down the busiest year we've seen personally and company-wide. Rates are, as most people know, they are in a spot where we have never ever seen. So, a big part of the market is obviously refinances, but purchase market is strong as well.
Absolutely. Yeah, we're feeling that effect for sure.
Sure.
So, help somebody who is kind of new, like if they're looking at becoming a first-time homeowner, how does credit play a part when going through applying for a loan for a mortgage?
Credit is obviously huge. Credit, everybody thinks about credit score first, and that is by far probably the biggest factor in credit. So everything is tiered. So, a lot of times 760 and above is your top tier. And then it goes down 740 to 760, 720 to 740, 700 to 720, and so on. Where, the different tiers can affect the pricing. The different tiers can affect what product you even qualify for. But even more so than just simply the score, there are little things on credit that can help somebody qualify. There can be different things on credit that can, make someone not qualify. For example, a single late isn't necessarily the end of the world. But if you have one 60-day late on a mortgage, it can cause a huge problem. Even if your credit score is good enough to qualify, that one particular thing may not for certain programs. So, again, you just can't look at credit score. There's a lot of individual factors within each account that can help or hurt somebody from qualifying.
So kind of deep diving a little bit on that then, are there things that you would consider to be helpful debt or not helpful debt? Like, what would that be like?
A lot of people have the misconception out there that not having credit, is good. On the flip side, it's not. The smart use of credit cards is extremely important to a credit score. We always talk about credit balances in terms of the limit. If you're over 50% of the limit, it can start to negatively affect the score. So having open credit cards is not a bad thing. It shows that you can continuously make payments every month. So it's better to have cards than not. But yeah, a lot of different things affect your credit score, whether it's installment loans, meaning car loans or boats or anything like that. But that revolving credit debt is, that you pay on continuously each month, that can change, go up or down. That is a very important thing to have as far as a credit score.
Okay. And as far as 2020 is concerned and people doing furloughs on their student loans, furloughs in regards to their mortgage, as long as they're in a forbearance program, I assume that that's not going to have a negative effect on their credit, correct?
That is actually an excellent question and something that has caused problems this year, because there's a number of clients that we have had that have gone into the forbearance. And when that program started, it was not known how that was going to affect your credit, or what the guidelines were if you were in that program, if you qualified for a mortgage. So a forbearance will not negatively affect credit score, which is great. But a majority of programs out there will not allow you to do a refinance or a purchase or any type of mortgage until you are out of forbearance. And not only out of the program, but we have to show that you are out and you have had to made 3 payments since that ended. So when a lot of people went into that program, they didn't realize that. Us as lenders didn't necessarily realize that right away either. As as that program progressed, the guidelines became apparent. And then, there were a lot of people that were surprised because they weren't told that, when they started that program. So that is another, like I said, excellent point. And another thing where it is important to, look at credit as a whole and not just as the score, because your score can be great. As I said, it doesn't affect score, but when we see that they're in that program, we certainly have to figure that out.
So, the way that I had always looked at credit was that it was showing a history or a pattern of behavior. And if you've got consistent behavior that shows that you're able to pay your bills on time and things like that, then that usually reflects in a better credit score, allowing you to have lower interest rates, things like that, correct?
Yes, that is a true. The truth is a majority of the people who are diligent and they make payments on time every month, they don't usually run into those problems. But there are little things at times, like the program we just discussed, where, a lot of people, forbearance, they didn't necessarily need it, but they did it just because it was a benefit to them and it would help, but they didn't have to do it. But yet at the same time, they didn't know what the consequence would be, with a potential refinance, as rates dropped, lower and lower.
Yeah, it was definitely scary because we just didn't know, what was going to continue to happen with lockdowns and stuff. So, what a time, 2020, my goodness.
It has been a crazy year for sure.
So also kind of going along like a first-time home buyer, help them understand the difference between a pre-approval letter and its necessity, as well as or versus a application and where that plays a part.
There's a big difference between what people will, call an approval, or a pre-approval and not, or a pre-qualification. A lot of people will just pull credit and say your credit score is good, so they might give out a letter. You need to be really careful about that. Whenever I give out a letter, I'd like to also see, their last 30 days pay stubs and their, last couple of years W-2s. At times, depending on what their situation is, you may need to see full taxes. If they're self-employed, if they have rentals, things that we need to see those taxes to calculate things correctly. So there's a big, so I would lean toward everybody, before they are fully confident that they have an approval, to go out and start looking and writing offers. Be sure your lender, actually sees all that stuff and has acknowledged that they have looked at and approved all of those items.
So I guess going one step further in regards to that, if they did that cursory where just looking at your credit score, you go and extend an offer, and then you go through and do the application, and you're running into a particular situation where you might being denied, right? So like that's why you're saying there's a huge difference between this just like cursory look at your credit score versus a little bit more detail.
Correct. You could very easily have a 760 credit score, which is great, but you might have had a forbearance on there. Maybe, the type of assets or, how your bank account shows the money. Were there any recent large deposits that we have to verify where they come from? So while credit score is a huge factor in what we do, It's certainly not everything. And to have a, to have a solid approval, you really need to take the extra time to go through everything and submit everything and just be sure that everything is solid. As when people are putting offers in on homes, you're likely not the only offer going in there. At times there's 5, 6, 8, 10, 12, so you really need to be sure you're on a firm, footing, and that you have everything lined up correctly.
So then once an offer is extended, then that's when they would go back to the bank and say, okay, I need to actually apply for the mortgage, because now you've got a property that's been identified and the price. Then it goes into the application process, correct?
Well, we actually do the entire application process right up front. So all of the items that we would get are good for 60 days or 90 days or even up to 120 days. So, it's really considered a full, basically a full app as far as qualifying wise, once we have all of that, and then having the exact property address, then we have identified the exact property. But by that time, we should have a majority of the items that we need from the potential borrower, going forward. Okay.
So let's just say everything is going well, right? We've extended an offer on our property and, you've gotten all the application stuff through. What is the typical time frame? For traditional financing, how much time do you guys typically need to make that happen?
That can differ as well. I would say average time is 30 to 40 days. So, I would say it's pretty typical for, a new buyer to put an offer in on closing might be anywhere from 30 to 60 days out. I would say that that's probably average. Have I gotten things done in a lot less time? Yes. I've got closings done, in 20 days. So it's certainly possible to get it done quicker. And that's another very important reason why you should have all your things lined up and submitted beforehand, because it certainly helps that timing process as well if you need to, rush and make things quicker. But I would say standard 30 to 45 days is no problem at all.
So if people are looking at purchasing right now, do you have any advice for them in regards to their credit score? Like, what are some things that they should or should not be doing to make sure that they would be approved?
Again, credit score is big. I would say don't, go, if you don't need to go out and purchase anything big, don't. Credit score wise, try to get, those credit card balances under, 30 to 50% of the limit. Things of that nature. Again, having a lot of brand new debt if it's not needed, do not do it. It just makes things easier along the way for you. But the people who, do things right consistently, and you have that 740, 760, 780 scores, those are, you're in really, really good shape. But for the other people that don't, it's not the end of the world. There are a lot of programs out there for people who have maybe had past, issues, or if their credit scores are 680, 700, 660, there's a lot of first time buyer programs. There's a lot of income limit programs that help everybody. So don't be worried or afraid, on a certain score, because there are a lot of different variables and programs available for you.
Awesome. And for somebody who is self-employed, what's the typical time frame that you want to see of income coming in? Yeah,
everybody loves to have your standard 2 years taxes of that. There is financing available for those that only have 1 year, but typically you need to show at least 1 year on taxes. If you have 2, great, but 1 is the minimum.
Okay. And certainly a lot of the questions that I've asked were geared more towards like a home purchase, but all of the stuff that you were talking about really does affect refi as well, correct?
It sure does. It sure does. The guidelines are the same basically if there's purchase, refinance. It's pretty standard there.
Awesome. All right. So as we wrap up, I would love for you to be able to share how people can get a hold of you.
Sure. My direct line at the office is 262-696-5040. Email is just Steve Kern. It's Kern @inlanta.com. Or Count on Steve Kern is my website. You can go there, get all the info that you need about myself, my company, different programs we offer. And it's got all my info there as well. You know, I'm certainly happy to answer any questions that anybody may have.
And you mentioned that you're local, so your office is in Pewaukee, correct?
We are on the corner of Capitol and Highway 164. So pretty easy to find. Big building right on the corner. So yes, we are local here. Okay,
and that is the only one around here then?
That's actually where our corporate office is. So we have a couple other offices in Hales Corners and Oconomowoc and so on, Madison, and we're in a number of different states as well. But that's where our main local office, where I'm located.
Excellent. All right. Well, Steve, thank you so much for making time for me today. I absolutely appreciate it, and it was a great conversation.
Thank you again so much. I appreciate it too.
Thank you. If you know of a professional in the housing trades that would be interested in participating in my video series, please private message me their contact information so that I can give them a call. I appreciate everybody stopping by today. I hope that this was great information for you as well, and I look forward to seeing you on the next Conversations with the Pros. Have a great day.